Good morning, everybody. Give me a sec here. Okay. Well, market's whipping around here on the news. See how meaningful it is by the end of the day. What are we starting here? SPX today. All right, so this thing's running up. How far will it get? Well, see if it could even get to yesterday's high. And should be the first reference point of resistance. See how far this gets. We'll look at the futures anyway. As far as premiums and getting away from the danger, I'm going to suggest the closest to get would be 38.60. Preferred would be 38.75. And above that, and I don't know, we'll see what happens here. Let's see what they're moving here right now. 38.75. That might be shrinking as it's rallying. But I looked at it, it's a dollar there, dollar by $1.20. So you could go a little bit higher. You want to go to 38.80, get a little further away, but somewhere up here. I don't think it'll get up that far. Right. I think above that 38.80, up in that area. I don't think it get that far today. It just, we look at the price patterns. What's normal? What's normal is it's going to stay in the bottom part of this wide range bar. Got close to support. So as I look at the futures, you get a better idea in S&P as to where they are within the range. Last time I looked, I think the spiders were around this area. Well, let's go look at that. Oh, on the downside, I've got 36.75. There's a lot of premium down below. Might be as close to the free money as we could possibly suggest, as far as it not going down, especially since it's going up here. Why should it get out of hand? Well, interest rates spike up again. But yeah, 36.80. There's premium there, and that would be below this pivot low. So you got yesterday's low, you got that pivot low, significant support, and then you could go to all the way down to 36.75. All right. 36.97. You want to get closer. It's a choice, right? When I look at these, I just look at what do I think would be free money, right? The closer you get to where it could potentially go, even remotely possible, where you get more money, you gotta be able to withstand that stress level. I have a low tolerance for stress when it comes to these things. 38.85. This premium 38.85. Yeah. Up in here, I think, sometimes Dan and I use the words no brainer. Well, I think that's a no brainer, up there for this to rally up there today. But, if it does, you probably have brain damage unless you manage it properly. Okay. All right. Spiders, where are they? You're rallying here. They had the whipsaw on the news and back up again, 38.80. So getting up into the upper three quarters, maybe 60% of yesterday's range for a gap open. What time is it? We still got time. I mean, if it gaps up here, if it's up here at the open, that would be impressive. And then so getting that much further opens up the door, but there's a lot of losers on these last 3 days that held on to this on this little mini downdraft. So 38. Where's that? I said 38.80. It's only up here. Got a pivot high on the hourly. That's not a pivot, but on a smaller time frame, it will be. So we've got several levels of resistance there. It did go down hard and fast, but it's a bit of a void. So there are levels there to deal with. But being at 38.80, we've got these overlapping bars right here, which is right here on the 15-minute chart. So as we open up the data to get an expanded view, we can see these overlapping bars look like a consolidation or base. So, break down, push up, back down again. This should be a significant level to try and get through here intraday. Internals, yeah, we take a look. Had improvement yesterday for sure. Where's that chart? Yeah, there you go. Okay. So breath pushed back down again. That's good, so it's in the area. The sentiment at the close, I would love for it to be above 1 on a closing level. But, I mentioned 1.2 historically is the static oversold level. But at least we're down through the bottom band here, which historically is not, no, let me rephrase that. It's significant historically when the bands are adjusted here, but these bands are like so high up, which I can't remember ever seeing them like this. But that's they're doing their job. The purpose of is to adjust for changing market environment. So it's a good start getting down into these bands. And if we should get some selling, today or whatever next week, it'd be even better to push it down into the lower band. And this is here. So, it's getting to where we need it to be. Better than being up here, right? So it's the beginning part of, to a bullish level based on the current market environment. Historically, it's not even close because it's got to go way down there, but I don't expect it to go down there. So, and you know what, if the markets go up today, let's say, well, they're up, if they can hang on to this gain and jiggle around down here, and we see more put buying saying, okay, now these people are getting bearish. They got concerned, as they should be, about this initial move down. And we see them buying puts today or even into the close over the weekend, being, oh, it's the weekend. I want to hedge myself. I'm nervous about that. And this comes down. That'd be even more encouraging as far as a low point. But again, the way this topped out, tried to go through here. We got that crazy back and forth action a week or so ago. There's going to be plenty of overhead to deal with. So I think the best we can deal with intermediate term from the bullish case is a trading range. Whether this is the bottom of the range or not, we'll see. As things progress, we have nothing, as far as a current bar that suggests we have a low in place. Maybe we will today. Let's see. All right. Let's continue. Obviously, the Qs is where the damage has been done. This head and shoulders top I spoke about over the weekend and here on Monday came to fruition. And yesterday we got down to 300. I think it missed it by a dime or so. You can see down here. And a measurement of this pattern. Grab that. Actually puts this, like you measure this, actually puts it under 300 for a low point. And so below that, there's nothing. So, somewhere in between here and here, if this is going to continue lower, and we're at 307, it's a decent gap up. into that, but really doesn't do much to negate this downward move. So really nothing to get bullish about here intermediate term, that is for sure. I'm just looking at the 60-minute chart, 307, big deal. It's in a downtrend. There's the congestion area over here. So getting above 312 intraday could open up the door to higher prices. No, that's pretty far away for right now. Okay. S&Ps, see they're up 43. You can see the retracement into that bar. If it can close like this at the end of the day, well, I would still think I need more proof because of the way it came down. Can it be hold on to this? Does it follow through at all on Monday? Or the other scenario, which I will, if it looks like this at the end of the day, which I will, do in the weekend letter, is be open-minded, meaning one day doesn't make a complete turn. It's the start of a turn, but this could easily turn into what Dan has coined a bull sandwich. What is that? The next day is a big red bar down, and that would, I'm pretty sure, would drive it down to this next level. But that's far away to be that possibly to happen. So day by day, right now you can see they're coming up, and they might be able to reach yesterday's high. It'd be impressive. But if it is there in the next 15 minutes or so, there's going to be sellers there. So while the markets are up and going up here, and you're like, oh, this is great, there's a turnaround, probably gets sold into almost immediately if it's up there by the time the market's open. Right. And Q's, lagging, of course, and beaten down, trying to get up toward that resistance level as well. And YM, the real schizo market. We talked about this up and down and up and down, and it's retracing nicely in there. And this is the void concept. Big red bars are power bars, but they create voids. Void is the weakest link in the chart. It's supposed to, remember, those of you that are here every day, we're on YouTube, you hear us say wide range bar, stay in the lower half. The open and close should be at the lower half at the completion of the bar, which means you can get a tail. We don't know what this is going to look like at the end of the day. So if this comes up into this area, it's already almost there, getting closer, and the market sells back off again, and this is a topping tail at the end of the day, you've got the candle body in the lower part of the red bar's range. And that is going to suggest lower prices. If it can hold on to the gain, what it means is that it will have created support, and buyers have stepped up in an area of resistance and defended, even though it's got the void on the way up. And so on the opposite of that, on the downside, when it created this pivot, it should have served as a reference point to stop prices from going higher. And when it didn't, it opened up the door to this void. And now prices are moving up in there. And when I figured this out many years ago, what a light bulb moment it was. Everybody looking over beyond what's directly to the left and trying to figure out how the hell are prices going up. And one second, guys. All right. All right. Russell, it was the strongest. Now it's the weakest, right? Because it's got the void. So it got down to the 50, didn't close underneath it, and beginning of a turn. And by the way, we're going to talk about turns next Wednesday in MT Live. Bonds are reaching their destination. It's going to get interesting here, real interesting. It may break through this just for good measure. And I say that because that's a lot of times what happens, just as an ending flush, right? This has gotten climactic on the weekly. It's gone vertical to the downside. It's at what I'm calling the destination, the bottom of the support level. That's a significant support level on the bonds there. But maybe 155 as it pokes down below here. And then we get some kind of a turn, which would be great to coincide with, if this does spike down, obviously interest rates spike up. Market's nervous about that right now. So a spike down and the market having one last flush to the downside, internals reach where we'd like them to be, and we get our buy set up, based on that. So, when we look at these market internals and intermarket analysis, it's similar to yesterday in the room. So one of the things that I mentioned as the markets reached the low point, right? There were several times where I said, oh, maybe this is down far enough. And I explained, this has not gotten climactic yet. Look at the way it's dropping on the 5-minute chart. There's no wide range bars. There's no vertical move. And then we got the NYSE tick hit minus 1,500. We had the VIX push up into the prior resistance. My alarm went off. I said, we're close here to the low. And it was maybe 2 minutes away. So as it relates to what I'm talking about here, right, wider, not longer time frames, bonds spiking down, market internals getting to where they are, it doesn't mean that the market's going to turn in 2 minutes. It could take 2 days. It could take a week. So we got to put this analysis within the context of the time frames that we're looking at. Okay. And oil just continues to do amazingly great, but it's coming up to, this resistance area. You look to the left, you close the void. That means you're getting to the destination. And it just like the bonds could poke through its lows, this could poke above the highs and get that last gasp of buying in there. And then it stalls. And this is kind of one of the things that I'm sure is making equities nervous, but also a positive in that, hey, this is a measure of inflation. Right? I wouldn't say our president, somebody's president there, cutting down pipelines and doing things that are not advantageous to Americans, but cutting back supply. Price oil goes up.
And Greg, Biden's going to cut down all your beautiful palm trees.
Well, you know what? Man, I think a lot worse than whatever he's thinking is coming, because that man is not going to live the next 4 years because, unfortunately, he's old and he doesn't look to be in good health. And who knows what the more liberal establishment is going to do. That's what I'm really concerned about.
I hear you.
Gold still doesn't look good. Coming down here, maybe a flush to 1,600. So far it just keeps going down. And silver also messy. I kind of like that intraday. This is one of the things I said in the green room, this kind of price action to look for a short-term low on a 5-minute chart, the spike down an immediate reversal. So that is suggestive of maybe this turning around, for an intraday play. And lastly, our transports, they got shellacked yesterday. So, things came together yesterday for the market to have a bad day. We'll just see how things evolve over the next couple of days. All yours, Dan.
All right. Good morning. Yeah, Roger, look at that link. I look at the Weather Channel every morning. And I grew up in Miami. Those palm trees are so beautiful. And when I read that headline, I was thinking that they were going to say they were sick. Because I grew up down there in the late, or I guess 70s. They did, a bunch of palm trees did get a virus. But no, they said they're doing them because climate control, climate change. Let's see, all our opens are fine. You know, we did a couple aggressive put spreads yesterday that were way out of the money. Amazon, Nvidia, Qs, and hopefully they're all going to expire worthless here. No, Peter, I just gave you the link. Bang here. Tiff emailed me last night saying, "Hey, Dan, what about a credit spread?" And I said, "Yeah, I love it." I couldn't find earnings though, and they looked a little spready. But let's keep an eye on Fang. Oil still remains bullish. Yesterday, as the markets were tanking, oil was holding up well. Got an XOP up here again, USO. So those still look higher, and we're long XOP in our ETF trader. We posted last weekend. We wanted to get XLE on a pullback, and unfortunately never did um, into the area that we wanted. I promise. Microsoft short. Not. I mean, pre-market here, it's busted out, so now it's range bound on the 15, but it is weaker than many others. So I don't know. I would set an alarm down here at say 225.50, which is $4 away. So I don't know. You know, it's not going to be easy to find new trades here with us being up so much. And you know, as Greg just went over, the range. Kroger, Kroger here it had earnings yesterday, had a something something bar. It's worth watching. I also mentioned KHC. I like the monthly. Um, you know, it got sold off with pretty much everything yesterday, but I still love the monthly. Miro, your drop down. Norbert GPS. 2684. Yeah, yeah, 30-minute high maybe. Right, I like it. I like the bottoming tail here. It's gapping up. So yeah, I'll put it in a window right there. That looks good. Miro, talking about the military, I was reading yesterday. I forgot to mention it. We have 5,000 National Guard in front of the White House. And Pelosi called something off saying, "Oh, I think I heard some chatter about a coup." I just answer me this one question. Who in their right mind would go storm the White House right now in front, you know, with 5,000 people out? It's crazy.
And when you screw enough people, you live in fear, even beyond reality.
No, that's exactly right. No, I know. See, so don't get me started. That's right. They want people to live
I
in
love
fear
getting
so
you
they can
started.
control you.
I love to get you started because I know how you don't like to talk about politics.
Exactly. I cannot, no, I'm not going to give you a blanket answer on GPS, Roger. You got to put it in a window and see how it sets up. I mean, we might do it into minor support here. Um, if it turns out we're over 27, becomes a 30-minute high, then very possibly, maybe. All right, look at this AEI. Yeah, I don't know what's going on here. Wow, look at that. Went from 11 to 22. Is that a Reddit toy today? Let's keep an eye on that. You know, let it settle down for 30 minutes. CLPS. This is getting a nice gap up. I'm going to put that in a window on my other computer. CLPS. It's worth watching. Eyes 233 bullish gap. So this is a shock pattern. Shock pattern. It's gapping up over all of this. Again, I'm not going to rush into anything, but let's keep an eye on it. On today's MRO. Yeah, MRO is on my list. I had another oil in here somewhere. Coup? No, it wasn't coup. It was maybe it's MRO. No, I don't know. But yeah, oil stocks are looking good. PYL. This is what we call a setup of a bullish gap surprise. And we like them to gap at least 30% into this ugly bar, and this thing's gapping 100% over it. That is another monster shock pattern. And so 30-minute high, this could give you a day trade. It could easily go up 10, 20 bucks. That's worth watching, but I don't trade in the first 5 minutes. And our Qs, we're back in the profitable territory. You know what? I'm gonna go ahead and move this to the pre-market low, 301.70. Give me a second. Maybe some of these things went against us yesterday, so I'm gonna keep a short leash on them.